Hey guys, Raf here from the End Game Investor. Hope you had a good Memorial Day weekend. And we're going to go into the silver inventories in the Comex today. We have drained since SilverSqueeze 1 in February 2021. Half of the registered silver stocks at the Comex have been drained. We'll go into the charts in a second. We're also going to go into a money supply anomaly, a dropping, collapsing money supply, meaning dollar supply in the banking system, that has been the most extreme since September 2001. Even more extreme than the collapse in 2008. That doesn't mean we are on the verge of a crash that's going to happen any second, but I will show you the trends. And next, while the mainstream financial news media is concentrating on the falling personal consumptions, expenditures, price index, core, or whatever they call it, the price of food is skyrocketing everywhere. And according to US farmers, prices are going to double by fall. And finally, something very surprising about the US housing market that even I was not aware of until today. Let's begin with the Comex silver inventories. This is the amount of registered silver stocks at the commodity exchange where paper silver is traded backed by a fraction of physical supplies. This is the registered pile, meaning these are the supplies that are meant to be traded against contracts. There is more eligible silver in the Comex, but that is owned by people, various players, who knows who, and none of that is for sale against futures contracts. It's just in storage. So we see here that at the peak, this is exactly when SilverSqueeze was launched by the silverbacks, by the apes, whatever they like to call them. About 150, looks like 152, 153 million ounces of silver in February 2021 at the Comex registered for delivery. Now we are at 75.47. As John Bon Jovi once said, we're halfway there, folks. Let's see if we can keep going on this. Now, if we have 75.47 million ounces of registered silver left on the Comex, that is the equivalent of about 15,000 contracts. 15,000 contracts can be backed by physical silver and delivered. And how many contracts are open in July silver, which is the current active contract? At the end of the month, this will be delivered 108,000, close to 109,000 contracts. So a lot has to be covered in the next 29 days. So about 95,000 contracts have to be rolled over or closed out by the end of this month, or there could be a raid on the registered inventories, which did happen before in July 2020, when the Comex ran out of registered stockpiles and the eligible stockpile had to be raided, mostly from the JP Morgan vault. That could happen again, but at what price is always the question. Now here is a chart of the M2 money supply. This is the amount of dollars in all checking and savings accounts in the United States. As these numbers fall, the bubble is deflated. This is a month-to-month sequential change. And you'll see here the change in the week of April 25th. The money supply fell by 2%, over 2%. That is about the same amount, that is close to the same amount that it expanded at the peak of the money printing bonanza in March 2020. The peak was 2.6%. This is the most money ever printed in consecutive months ever. So when's the last time we had a number this low? I mean, a crash in the money supply of over 2%. We have to go to the max charts here, which I'll expand. And we see here, if we zoom in here, it was in 2001, right after the September 11th attacks. This is September 24th, 2001, when the money supply fell by 2.54%, but that can be explained by the huge jump in money supply right after September 11th, when the Fed really expanded the money supply to try to cushion the fall in the economy after the attacks. That, in that case, the money supply expanded by 3%. But if we look at what's happening now, this fall in money supply of 2.01699% comes after just normal expansion of 0.35% the week before. So unlike in 2001, we had a huge expansion in money supply before that huge drop, which evened itself out, this time we just have a huge drop. Now, if we go back to the 2008 era and see what was happening to the money supply week to week back then, this is 2008. This is what led to the 2008 crash. Eventually, we have a drop in April 2008, which is post-tax day, which is when basically the biggest money supply drops tend to happen after the Treasury sucks up a whole bunch of money from the banking system every year after tax day. That fall was 1.7%. This fall beats it over 2%. We are probably headed for a big money supply squeeze, which should hammer stock prices by August, September. Obviously, it depends on whether the trend continues. The Fed could reverse itself at any week, so this is not assured. This is just a trend right now. But generally, the money supply growth rate tends to bottom at around August, early September, somewhere around there. And that's when crashes tend to happen. And now, while the financial news media is focusing on the falling PCE core inflation rate, and they're saying, oh, look at the transitory was right, and the inflation is expected to cool down. Yeah, and maybe other things that are discretionary spending like entertainment and apparel and whatever, but food prices are going to head a lot higher very soon from here. How much higher? Here's what U.S. farmers say on the matter. This is the Epoch Times. Looming price hikes on food set to hit Americans this fall, meaning September, around the time when money supply should start to bottom. Here's the first quote. People don't realize what's fixing to hit them, said Texas farmer Lynn Bugsy Allen. They think it's tough right now. You give it until October. Food prices are going to double. Usually what we see on the farm, the consumer doesn't see for another 18 months, said John Chester, a Tennessee farmer of corn, wheat, and soybeans. With the severity of these cost increases, consumers could feel the effects much sooner, particularly if weather becomes a factor. Nothing that consumers are paying is going to bridge the gap for farmers right now, she said. The prices now have not hit the grocery stores yet, but she expects they will start to by the end of summer. And so, one of two things can happen here. Either food prices can be passed on to consumers and they pay the higher prices, and the farms that are in the red now stay in business, or costs cannot be immediately passed down to consumers. Food prices stay relatively more stable. Farms that are in the red now go out of business, supply falls, and then prices go up. Either way, they're going up. It just depends exactly when. And in a hyperinflation, all that really matters is food prices, because as food prices go up, more people hoard food, which leads to food prices going up, and the rest of the prices do not matter, not in a hyperinflationary economy. But anyway, you want to know what surprised me about the U.S. housing market? It was this chart. This is the United States total housing inventory. You can see here, this is the 2006-2007 bubble peak. This is when housing inventory reached a peak, and it has been falling, trending down ever since, and we are now at an all-time low. And a seasonal uptick because of seasonal building trends, but we are at an all-time low in housing inventory. So what is this telling you? It's telling you that fewer and fewer people can afford to buy houses, and the cost of building houses is becoming too high for construction companies to actually do it. This is society getting poorer. This is part of the reason why housing prices are increasing besides the money printing, because supply is very low. And because housing is so expensive to build, because raw materials keep going higher because the dollar is dying, inventory situation is not going to get any better anytime soon. And the final thing I want to show you today is something that's happening in the gold market. In the paper gold market, we're seeing a pattern that we saw last February leading up to the gold spike to 2080 on the Russian invasion of Ukraine. And that is this. Those trapezoids there, I may have shown this before, but it bears repeating. The top is the gold price. As it rises and open interest, meaning the amount of contracts that are open, falls, that means that shorts are closing their shorts as the price rises. And still, speculators are not adding to their positions because they don't believe in the rally and they are bearish and sentiment is reversed. That tends to lead to a more sustained rally, as finally when the speculators start picking up again here, as open interest rises, that's when price really starts to move. Here we're seeing the same thing again. In mid-May, gold prices bottomed at just below 1800 over here, where the arrow is at the corner of this trapezoid right here. Since then, open interest has been falling from about 560,000 contracts to now about 520,000. All in that time, price has been trending higher. So the same thing is happening. Shorts are closing their positions to a degree. Longs are not adding on net. They are not believing this rally, which gives a lot of speculator room for price to move higher. Whether this is the big move that we're waiting for or just a counter trend, we'll have to see. especially when money supply tends to bottom around August, September, which is when stocks should be crashing if the Fed does not turn around by then. And is any of this a sure thing? Absolutely not. You have to continue with the trends and follow them and see what's happening with the money supply growth rates and all the other stuff. So keep following, but whatever is coming is getting close, as a food price spike is unavoidable, and people take whatever purchasing power remains and whatever borrowing capacity they have left to buy the basic necessities that they need to survive as society gets poorer and poorer. This is Rafi of the Endgame Investor. Hoping you enjoyed this edition of Doom and Gloom, but of course, if you have real money, there is no doom.
No!
Doom! If you like this video, subscribe to a 2-week free trial of the Endgame Investor, and you'll see the more precise calculations of the money supply that I give to my subscribers, and what will make me more sure that we're headed for an August-September crash of mainstream and bubble tech stocks, which is not assured yet, but we're headed in that direction. And you can also become my patron on Patreon, where I give a weekly video on economic and monetary commentary on the Bible. And have a good 4-day week.